Hello everybody and welcome to the channel. My name is Daniel Ackerman and I'm your Manhattan, Brooklyn, and Queens Realtor. Q3 of 2025 was the strongest quarter in Manhattan real estate in nearly 3 years. Let's break down what happened and make sure you stay to the end of the video to hear my forecast for Q4 and beyond. Now let's jump right into it. So let's start with prices, okay? And we'll look at co-ops first. So co-op median price hit $870,000. That's up about 4% year over year. And homes were selling, co-op units were selling for 79 days on average, which is really, it sounds slow to most people in the country and other parts of the country where homes sell in 15 days. But in Manhattan, that's a really healthy speed days on market for co-ops. I've been licensed since 2015, and that's some of the lowest days on market I've seen for co-ops, barring maybe 2020 when the market was on fire. Okay, condos, median price hit 1.65 million. I remember just a few years ago when breaking the $1 million mark was a record, and now we're at 1.65 million, north of 1.5 million, heading towards 2 million. That's up 16% year over year. Inventory was up a little bit, but it was still competitive. Okay, townhouses. Now, townhouses are a niche market, let's face it. There's very few of them. There's pockets in Harlem, pockets in Sugar Hill, there's pockets in the West Village and Tribeca where you still find some townhouses, but there's not many of them, right? Still, sales rose about 11%. However, prices shifted lower due to smaller homes trading hands, okay? So overall demand continues to outpace new listings, which means that it's favoring sellers, right? Especially for well-priced homes. Let's look a little bit at transaction counts and sales volume. So for the co-op market, sales volume, the number of closings was up 11%, okay? Inventory was up to 3,669 listings. That's 5.7% increase year over year. Months of inventory or months of supply is 6.3 months. So that's a balanced market. Anything between 5 and 7 months is considered balanced market. Lower than 5 months is a seller's market. Above 7 months is a buyer's market. We're at 6.3 months, right smack dab in the middle, and that's a decrease of 4.5% year over year. So an accelerating market, but still very much in balanced territory. That means as far as pricing, if you are a co-op owner, you should price pretty close to the estimated appraisal value, which a realtor like myself, if we run comps accurately, we're going to look at it the way that an appraiser is going to look at it. We're going to give you an estimated appraisal value. And whatever that appraisal value is, you should list pretty close to that value because that's what appraisers are most likely going to value your apartment for. And in a balanced market, that typically is what happens, is that apartments trade for about the appraisal value. Okay, so don't go crazy trying to push the envelope on pricing, but you also don't have to list at a discount to try and find buyers. Now let's look at the condo market. As I mentioned, median sale price up to over $1.6 million. That's a 2% increase over last year. Days on market was down 4% to 74 days. Again, a very healthy time to be on market. I want to make a quick aside here. Days on market is a great indicator to know if you've priced well or not. If you go ahead and list, your apartment, your property should sell for about the same amount of, or should sell after about the same amount of days as the days on market. If you are on the market substantially longer than the average days on market, that means you've overpriced, okay? If you are on the market a lot less than the average, that means you've priced really well, you've created a lot of demand on your property, and you've gotten offers like that, quick, and you've gotten really good offers, and you're able to negotiate the best terms, and boom, get into contract really fast. So shorter days on market is always a good thing. It means less carrying costs for the seller, less closing expenses, and a faster closing is always a better thing. It also means that you've generated more offers. But generally speaking, what I want you to take away from this is that you should sell for about or after about the same amount of days on market as what the average is. Otherwise, there may be something going on with your pricing. So getting back to the point, days on market for condos was 74 days. So that's down 4% year over year. That's great. Sales volume, the number of closed sales was up 17% for condos to 1,407 closings. Now, the condo market did have some hiccups in the last couple of years. A lot of things were having trouble moving, especially new development, maybe was running into some issues, but it seems to have really, really recovered. So that's great. Active condo listings, it was up 8%. So again, this indicates that if you looked at my Queens market report, you saw something similar, that a lot of people were on the fence about listing their homes, maybe because they couldn't buy on the back end, after a sale, or maybe they were worried that they weren't going to get good offers on their property due to the interest rates being high. But what we see here is that in 2025, people finally got off the fence, and sellers were jumping into the market, listing their homes, and inventory went up 8%. Number of new listings went up 8% year on year. Months of inventory was down 6%. So keep that in mind. Inventory went up, but months supply went down. That means demand was there, right? Because months of supply factors in supply and demand, right? If your demand is not keeping track with your supply, if it's lower than your supply, then the months of supply is going to go up. Okay. If your demand is much greater than the supply that's available, then the months of supply is going to go down. And that's how we calculate whether it's a buyer's market or a seller's market. So we're in 8.7 months, which is still buyer market territory. Keep that in mind, right? It's above 7 months of inventory, but it's down 6.5% from last year. So definitely the condo market seeing a recovery in Manhattan. It's still a buyer-friendly side of the balance, as we mentioned, but we are seeing a lot of activity, and buyers are having to be a little bit more proactive about placing offers and placing strong offers when they find a property that they like. So thanks for staying with me up until this point. Now let's talk about the fourth quarter. So since we've seen this uptick in the third quarter, we would expect that it would also be reflected in the fourth quarter. But very important, don't expect the fourth quarter to be higher than Q3. Q3 is the peak of the Manhattan real estate cycle, okay? We see the most contract activity in the second quarter, right, around June, May or June, and we see, therefore, the most closings in the third quarter. August, September is always the peak of the closing season, and you're going to see the peak in sales and sales volume and all that stuff in the third quarter. The fourth quarter, starting from, like, say, November 15th, all the way through January and into February, is very slow compared to the rest of the year. People don't want to be out, doing this during the holidays, and closing activity drops as a result. I have a whole video on this. You can see a link to that on your screen now, hopefully. If not, look in the description below, and I'll post a link to that, all about the seasonal nature of the Manhattan market. So you wouldn't expect Q4 to be higher than Q3, but you would expect Q4 of this year to be higher than Q4 of last year. And if you think about Q4 of last year, we had an election going on. We were going to inaugurate a new president. And so that always brings uncertainty with it. And then we're now well into the new administration, like it or leave it, but we're into the new administration, and things have sort of stabilized, at least in that sense, right? People know who the president is. And so we should expect that Q4 of this year is going to be a little bit better than Q4 of last year. And I would expect that moving forward into 2026, we'll be seeing a more healthy real estate market. We are expecting more drops in the interest rates from the Fed. That's already been publicized in the news, so we should see a couple more drops in this fourth quarter. That's going to have a knock-on effect moving into 2026 as people get past the holidays and they want to, think about buying a home before the beginning of the school year in 2026. They're going to go out there and get their pre-approvals at new lower interest rates. They're going to get their tax returns in April. They're going to be flush with cash. So I would expect that moving past Q4 of this year, 2026 is going to be a good year. Fingers crossed. So let's see how it works out. The time will tell. But I want to thank you for watching. If you found this information useful, make sure to give it a thumbs up. If you didn't, give it a thumbs up twice. Make sure to subscribe and hit the bell icon. You'll get notifications of all my future videos with helpful information like this for homeowners and home buyers, investors, and the rest of it. And to get a copy of the full report, to read the full report, make sure you visit the link in the description below. I'll have the full report on my blog with links to some charts and some data so that you can download that as well if you're interested. Make sure to write your questions in the comments below. If you have any questions, put them in the comments. If you have suggestions for future videos, put them in the comments. Your comments, I read all of them. I'll respond to all of them. And I'm really looking for input and feedback from you, the audience, as to what might be helpful. I'm Daniel Ackerman. Thank you for watching, and I hope to see you on the channel again soon. Take care.